Brian Moynihan's efforts to boost Bank of America Corporation profit through cost-cutting finally got some help from interest rates. The lender posted the highest net income in 6 years as the chief executive officer cut expenses more than forecast and net interest income rose to the highest since 2011. Moynihan and his executives have promised for years that the bank will boost revenue from lending whenever interest rates rise. After disappointing investors in the second quarter with a surprise drop, the bank exceeded expectations in the latest period. Net interest income, which makes up about half of the Charlotte, North Carolina-based firm's revenue, rose as the Federal Reserve has raised interest rates 3 times since December. Legal costs. During his 7 years as CEO, Moynihan has worked to reduce legal costs that dogged the firm after it acquired Merrill Lynch Company and troubled mortgage lender Countrywide Financial Incorporated. The lender has spent $70 billion on legal bills since the financial crisis, more than any other U.S. bank, including $30 billion on mortgage putbacks. After $20 billion in expenses in the last 5 years taken out of this company, there is no team that is more focused on this than the team that works for me, Moynihan said on a call with analysts. Moynihan's quest to right Bank of America drew praise this month from Berkshire Hathaway Incorporated's Warren Buffett, the firm's largest shareholder. Buffett said in a CNBC interview that the CEO has done a fantastic job. Berkshire Hathaway took a $11.5 billion investment gain earlier this year when it converted preferred shares into common stock. Total revenue rose less than 1% to $21.8 billion, slightly below analysts' expectations, weighed down by a decline in mortgage banking fees. Expenses dropped 2.5% to $13.1 billion, the bank said Friday in a statement, compared with estimates of $13.3 billion. The lender reduced staff by 0.5% from the previous quarter to 209,839. See also Bofa cutting staff again after single quarter of hiring. More revenue from trading stocks and bonds declined 15% from a year earlier to $3.15 billion, in line with what the lender predicted last month. Fixed income contributed the most to the slump, falling 22% to $2.17 billion. Equities trading, which is about half the size of fixed income, rose 2.5% to $984 million. Trading of fixed income emerging markets products was down in the quarter, and there was less activity in Asia compared with last year, D'Onofrio said on the call. Shares rise. The bank's shares rose 0.6% to $25.59 at 10:13 a.m. in New York. The stock climbed 15% this year through Thursday, outpacing the 8.2% advance of the 24-company KBW Bank Index. Net income increased 13% to $5.59 billion, or 48 cents a share, from $4.95 billion, or 41 cents, a year earlier, according to the statement. The average estimate of 26 analysts surveyed by Bloomberg was for per-share profit of 46 cents. Bank of America posted $11.4 billion in net interest income, using the adjusted figure analysts tend to prefer to show fully taxable equivalents. The topped estimates of $11.35 billion. The second-largest U.S. lender said it wrote off $900 million in soured loans during the quarter, or 1.4% more than a year earlier. The bulk of the bank's bad loans are tied to U.S. credit card users, according to the statement. Provisions for credit losses increased 15% from the previous quarter to $834 million. Those results echo reserve building that Morgan Chase Company and Citigroup Incorporated undertook during the quarter. Those banks boosted their reserves for consumer loan losses by the most in more than 4 years. On balance, BAC's results stack up better than those of peers, as credit surprised positively, Stephen Chubak, a Nomura Instinet analyst, wrote in a note to investors, referring to Bank of America's stock ticker. Investment banking fees rose 1.3% to $1.48 billion from a year earlier, fueled by increases in revenue from advising companies. that beat analysts' $1.31 billion estimate.